As if lockdowns around the country haven't been enough, now the country has to get through its traditional summer season of natural disasters. On top of that, our insurers have to rapidly work out climate change strategies to price their policies and work out their own risk profiles. I'll sit down with the Chief Executive of the Insurance Council, Andrew Hall. Andrew Hall, many thanks for your time. Summer is coming. It's a time of flood, fires. It is the natural disaster season. Just given the issues that Australians have gone through, what sort of shape do you think Australians, but also Australian insurance companies, are in to sort of cope with what might come?
Well, Ross, we're very worried about this coming summer season. As you know, it's the season where the most amount of natural disasters tend to strike our country, and this year they're predicting a very wet one. We are expecting a few more cyclones than normal in Queensland, for example, and a lot of rain down the east coast. Now, insurers are well equipped to respond to natural disasters, but it's very much a national workforce that does that job these days. And with the border closures between Queensland, New South Wales, Western Australia and the like, we are very worried to be able to mobilise the workforce needed in the clean-up, in the aftermath, may be severely hampered. And it would be a great tragedy if it takes days or weeks to negotiate to get people across a border to help out fellow Australians who are in need.
So is what you're saying that there's a lack of coordination between the states that could potentially endanger any clean-up, any rescue operations that might be needed if there are natural disasters?
There is an agreement around emergency service workers and first responders, but even that requires a process to go through with exemptions. But what happens in a natural disaster, whether it's a cyclone or a bushfire, it's the immediate 24, 48 hours when insurers go in and literally find people short-term accommodation, give them cash grants to be able to buy groceries or school uniforms or whatever's needed. And that quick response, it would be a tragedy if it's delayed by state bureaucracies slowing down exemptions. So we are putting forward a plan to all the state governments and through the federal government around how fully vaccinated insurance workers and assessors should be given quick and easy access in the event that there is a disaster.
So the actions of the New South Wales Premier Dominic Perrottet this week to open up his borders, does that give you any hope that, this effort might actually be better coordinated into the future?
It gives us hope in one sense that if there is a major disaster like a hailstorm, Australia actually imports a lot of its tradies to help at that point. We get trades from New Zealand, from Brazil, that help re-roof homes quickly. And we've been very worried that up until this morning, or Friday's announcement by Dominic Perrottet, that even getting in that help from overseas was going to be difficult. So it does give us a glimmer of hope that there are ways of dealing with this trade shortage that is happening across the country, and we can start to get back into a position where we can respond quickly to these disasters.
So, Andrew, there's another issue of this, and that is that, there are more heavily populated areas and there are more weather events affecting those. So damage to life, to property becomes more significant. Are insurers in good shape financially, do you think, to manage with those changes coming in Australia's society?
Well, it is the case that insurers have had one of their worst performances for nearly 2 decades in these last couple of years, driven largely by the natural disaster events. Since the summer bushfires of 2019-2020, which actually started in winter, and cost us around about $5 billion. We've had another $2.5 billion in natural disasters. We've had hailstorms. The hailstorm in Brisbane last year cost nearly $1 billion in claims. So there has been quite a demand driven by these events. It's clear insurers have the data to show you what is the financial impact of climate change. And in states like Queensland, where nearly 60% of all disasters happen, the cost has been something like $11 billion over the last decade. So there is a cost to climate change. Insurers do bear it, and everyone pays for it through their premiums.
There's also climate change, of course, and it's the way in which maybe the insurance companies, account for that climate change into the future, the risks that are being taken. Do you think, again, they're strong enough to be able to manage it without pushing premiums sky high, which makes the insurance for many people unaffordable?
Well, the real measure here is whether we can obtain reinsurance in the global markets, and Australia is a large customer for reinsurance because we have a lot of events, and at the moment we can. But what reinsurers tell Australian domestic carriers is we need to do a better job of building more resilient, homes. We need to do a better job of land planning. We need to put communities out of harm's way and in homes that can withstand a cyclone, that can withstand these severe hailstorm events and come out of it with their assets better intact so that insurance remains affordable.
And what about the actions of the insurance industry itself? I mean, the Hayne Royal Commission raised issues of reputation and wrongdoing inside the industry. Do you think now that the insurance industry is recovering fast enough from that to help restore its reputation?
Well, I think the insurance industry has been working very hard on building that customer trust, and it's usually through actions, not words, and you see that very much the case after there is a natural disaster. Following the bushfire event, insurers were on the ground very quickly. They closed claims at a record rate. I think nearly 80% of claims were closed within 6 months of the event, which is significant because it gets money and it gets certainty back into people's in their pockets, and they can make decisions about where they're moving on to. But we are very focused that customer trust is incredibly important in insurance. We need people to have confidence in the insurance sector so they keep paying their premiums and the pools remain healthy. That's why we've introduced a new code of practice that took effect from the 1st of July this year, and we're basically raising the obligations that insurers put on themselves on how they manage their customers.
So you're also now putting in a new code of conduct to basically ensure the members of the Insurance Council of Australia do comply, do behave in a certain way. Yet even this week, we've seen one example of a company which has overpriced insurance deliberately to be able to give a discount that looked attractive to potential customers.
Yes, that's right. There is a code of practice which the insurers sign up to. If they're a member of the ICA, they're obliged to follow that code of practice. It sets out clear obligations around how claims are handled, the time frame that you must be responded to as a customer, and even the process. We've made the complaint system much more simpler. You don't have to wait to escalate a complaint inside an insurer now before you take it to AFCA for resolution. There's also a number of other measures that have come in that are new, including sanctions, which an independent committee can impose on insurers for breaching any of these obligations. So the industry is taking its obligations seriously. There is also, this is in the backdrop of a raft of regulatory reforms that the federal government has initiated post the Hayne Royal Commission. We are confident that while it'll take time to bed some of these down, it will improve trust with consumers. We are just very focused on making sure that when it matters, we're there and that insurers respond as quickly as possible.
So what are the maximum penalties that you can impose upon insurers that do the wrong thing?
Well, the Independent Code Governance Committee, which is separate from the ICA or the insurers, they can impose sanctions of up to $100,000 per breach, depending on what those breaches are. So it really does sharpen the mind of insurers to make sure that they meet their obligations around complaints handling, investigations, cash settlements, all the key things that customers would expect them to do.
Would the type of example of the type of thing that might be investigated is what was revealed this week with one of the largest insurers in Australia having deliberately overpriced insurance so that its discounts looked affordable. Would that be the type of thing that committee that you would investigate as part of this new reform?
It is part of it. Is that it's holding insurers to account for what they promise their customers are going to deliver, and sets out the timeframes. But the issues I think that got raised this week and the action that ASIC took is all about sending a message clearly to the sector that we do need to try harder. I think the industry has been working very hard since the Hayne Royal Commission, and in fact these matters that were raised this week by ASIC have been self-reported by the industry to ASIC after having looked at their books and tried to understand where things had gone wrong. It's not acceptable that customers should be remediated quickly and apologised to, which I've noted that the companies involved have been doing that. And really what we're focused on now is moving forward. How do we ensure that there are policies and processes in place and that there's that risk governance in place within insurers to make sure that the same mistakes don't happen again?
Andrew Hall, many thanks for your time.
Thank you, Ross.